Hello, I'm Julia Cordova, and I thought I would do a quick video today because there are a lot of people on Twitter saying to me, I am so freaking confused. And they're not even confused by me. They're confused, I think, just in general because there's so many different ways to trade. There's so much information out there. And how do you develop a process? How do you develop a trading process that is winning and repeatable? So, what I can't do is to show you in a very short YouTube video what I do. But what I can do is I can try to sort of just simplify some technical analysis concepts and sort of get you thinking about what the right way might be for you and hopefully get you on the path to being unconfused. So that is my goal from this video, is just to 50,000 foot view of all the different things that are out there, and then we'll go from there, and then we'll do some charts. That's like where it's at. Okay, so there are all different sorts of ways to trade. Candlesticks is one of them. I mentor a person, and the very first thing I did, I think in the first conversation we had, is I sent over a cheat sheet of different candlestick formations. And he's like, what is this? You don't use candlesticks. I'm like, but I know candlesticks. I understand them. And so all of the different methods I'm talking about are just things that it's good to know, but you sort of would have to choose the right one for you. So there's candlesticks, there's pivots. I use my own pivots from my crazy lines. There are fib levels and kind of also as pivots, and there are VWAPs, there are Keltner channel, there's all sorts of different kinds of pivots. Then there are shapes and formations. So there's bull flags, there's bear flags, there's head and shoulders, there's wedges. There are fractals. If you watched my All That Glitters Gold video, you can see that I use fractals as well. Fractals are a series of repeating candles that they may not be in the same time, they may not look exactly the same, but they're sort of patterns of behavior that repeat themselves over the time of a chart. So there is also, you can see on, I think somebody asked me, what are those squiggly lines on your chart? I mean, which ones? But in particular, they were talking about moving averages. So I, in particular, use the 9 moving average, the 20 moving average, and the 50 moving average. And let me just tell you the very simplest way of trading that will work every time, that nobody wants to follow. I've mentioned it before. No, nobody ever does this. If you are just watching a daily chart and something is in a trend, that means it's not just going sideways, but it's actually sort of in a trend going up or in a trend going down. One method of trading that's repeatable and pretty freaking good is if price closes above the 20 moving average, then go long. If price closes below the 20 moving average, then go short. Then when price reverses itself from whichever way it went, close the trade. You will not get the very bottom, you will not get the very top, but you will get money. That's good. And not every time, I mean, clearly something can get above and then go quick below, or vice versa, but it's a very consistent, repeatable thing. And you can look at charts in hindsight and you can sort of map out for whatever equities or commodities or whatever you're interested in, whether or not that works. You can back test. You don't have to be sophisticated to back test that. You can just look, but it works. It works a consistent, a very good amount of the time, enough to make somebody money. Okay. And then there are people who even trade with phases of the moon. Okay, these people are freaking werewolves. They are crazy. I look at it too. I'm just saying, it's good to know a little bit about each of these so that you can figure out which one works for you. But if you know a little bit about each of these, you can sort of combine them all together so that if one thing is going in your way, if it's a bull flag, and you also see a candle formation inside of that bull flag that you like, that's good. That's good. So phases of the moon, and then the last thing, well, not even the last thing, I'm sure there's a lot more, but there are even crazy ass people who trade with fundamentals. I don't know what that's about. No, that's good as well. There are some fundamental traders who follow me who don't. There's there are some smart freaking people that I follow and follow me that trade on all different types of things. But the fundamental traders, they know what the heck they're doing. They don't even look at charts. They just like, I don't even know. That one I can't help you with, but I don't know what they do. They do some thing in their brain and they figure out whether something's bullish or bearish. I don't know, because it's, to me, it's the opposite of what it should be. So I don't know. I don't know what they do. I'm against that. Anyway, I don't care what you do. Just make money. So those are the different ways to trade: candlesticks, pivots, whether they're fibs or whatever, shapes and formations, fractals, moving averages, phases of the moon, and fundamentals. I'm sure I'm leaving out some stuff, but those are just things that I would be familiar with if I were a new trader. Okay. Now, the big thing that everybody always gets twisted up about on Twitter is, and it's something that it's overlooked a lot, but it's time frame. So I could tell you I was bullish on oil, and then you based on that, and you shouldn't do that, but based on me saying that, you'd be like, all right, that's a buy. So then it goes down for the next 5 days in a row, and you're like, what the hell? I'm like, I'm right, because I was talking about over the course of the next year. So it's very important to understand not only what somebody else is talking about in terms of time frame, but like what your own time frame is. Are you somebody who is in a trade for 5 minutes, or are you somebody who's in a trade for a day or 5 days, or are you going to be in this trade a year? Are you an investor versus a trader? So you sort of have to understand where your own comfort level is in terms of time frame. And working off of that, before I make any trade, I always check at least 2 time frames, at least. And the reason I do that is because I don't want to fuck up. So if I'm making a trade based off of if I'm making a trade and I have a bad entry, as long as I've checked, and let's say I use the 4-hour chart as my main go-to. That's just me. I mean, I use smaller charts and bigger charts too, but I like the 4-hour. It's my groove. That's my groove. But before I make a trade on a 4-hour chart, I will consult the weekly chart, because if, let's say I was making a bullish trade, so if the weekly is bullish, then if I fuck up when I enter the 4-hour, then I'm gonna know, okay, at least I know this could turn around, because price is generally going in the direction that I want it to go. So look at multiple time frames and always assign higher importance to the bigger time frame, because that's the one that's going to either help you or hurt you if you entered a trade at a bad place. And that also gives you, it gives you sort of like, there are sometimes I've said, if I'm scalping something, I may hang in there a little longer than I should, but it's because I'm looking at a higher time frame, and I'm going to wait for that to fail before I sort of exit out. So there's that time frames, and then there's also indicators. So on all my charts, I use RSI. That's just my go-to. I used to use, I don't know, 10 indicators, and I would have this thing where if 6 of them agreed with one another and it got to my pivot, then I would go forward. That is just really complicated, and it didn't seem like I was like magically making money based on that. So finally I'm just like, you know what, as much as I did love some of the other indicators, because some of them are really good, like I think I used to look at percent BB. I like that one. I like that one a lot. If it gets to a certain level, that's good. But anyway, it's good to be familiar with all the different indicators, sort of understand what they all are. And then for me, it's all about simplification, but I've seen lots of charts on Twitter and around the web that are kind of complicated, and that doesn't make them, I'm saying that's funny, but it doesn't make them bad if they have a lot of indicators. It's just that's how that person goes. And so nothing wrong with that, just me in particular. I like to keep it simple. I look at price and I look at RSI. Sometimes if I'm feeling crazy, I look at MACD. What? So there's that. Now, how do you know where things will go? Like, okay, So when I was a new trader and I would get into a trade, and if it was winning, I didn't go around and look for charts that agreed with mine. Like I just won. That was easy. But if I'd get into a losing trade, I would comb the freaking internet to find anybody who agreed with me, and then I would follow that person. I would worship that person, and that person's so smart. No, they're not, because they're agreeing with me, and I was wrong. So uh, it's not that when you're combing the web looking for people who agree with you. That is, at least as a trader, I think one of the very worst things you can do. I follow a lot of people that don't agree with me, and they're a lot of them are smarter than I am, and that's good, right? I want to follow smart people, um, but I'm looking for different viewpoints. I'm looking for the other case that I don't have. And so people will say to me all the time, they'll see that I like something and it was like exactly the opposite of what I think. And then they'll be like, well, did you like this? Don't you think that? I'm like, no, I just respect that person's opinion. I appreciate that person posting it. And it's valuable to me. So whether I'm right or wrong is irrelevant. It's it's respecting other people's opinions. So, but how do you know where things will go? It's so tempting. It's so wonderful to have a person say, gold is going to do this, or the market is going to do that. And there's comfort in that, right? That's like certainty. That person knows what they're doing because they seem really confident. But the truth is, they're just guessing. They're just taking all of their screen time. They're taking all of their indicators. They're taking all of their, I don't know, Miss Cleo, like call-in services. And they are just saying that's what they think. They don't know. And so as a trader, the best thing you can do is, I'm going to tell you, at least for me, it's impossible for me not to have a bias. Of course I have a bias. Of course I do. And people who say that they are unbiased, I'm going to give them a little like, I don't think so, because it's just hard not to be. I mean, because that's where you develop your bias from, right? The larger time frames, and then you go to the smaller time frames. But the thing is, the right way to think of it as you're planning a trade is not, well, this is going to happen. It's if price or if these things happen, then the odds are very likely that this other thing will happen. If this other thing happens, then the odds are very likely that this other thing will happen. I don't know if I'm being very articulate right now. I'm sorry. But what I'm trying to say is it's sort of like having a decision tree in your mind. So instead of thinking, all right, I'm going to make this trade based on the fact that price is going to do this, then what you're actually saying is if price does this, then it's more likely to do this. If price does that, then it's more likely to do that. So it's important to be able to change your bias based on what is actually happening throughout the day. Now, if you have followed me for any length of time, and I know some of you probably listen to my interviews, you'll know that pretty much after September of last year, I stopped trading ES. Why? Because it wasn't doing things that I thought it should do. Now, is that like the most genius strategy? No, but I knew that I could not trade it in an unbiased way. I wanted to short the crap out of it like all the time, and if I did that, I would be broke. Like, some people were looking to short gold at the very top, but then the very top could be here, or the very top could be here, or the very top could be. You don't know when that is. So you're sort of saying to yourself, if price gets below the highest high by X amount, or if it gets to my pivot, which is below that, or if it bounces off of my top pivot again, then I will take that. So that's sort of all in trade planning as well. It is basically just being able to know when you will take a trade based on what will happen. And then you also, before a trade is even put on, is you have to understand when you'll know that you're wrong. So even if it did this thing that you were looking for price to do another thing, then you will know that you're wrong if it, for an example, goes, I don't know, X number of pips down, or whatever method you're using. If the candlestick thing was wrong, or just know ahead of time when you're wrong. Now, you will sometimes be right even if you thought you were wrong. That used to happen to me very frequently. The key to understanding that and then moving around that if I'm wrong level is by doing a very detailed trading journal. So I talk about that all the time. It is taking a screenshot, not after you make the trade, as you make the trade, because those wiggly things, those indicators and everything else will change so fast that it'll be impossible for you to understand what you actually saw if you do it in hindsight. So I take a screenshot when I trade, and then I know when I'm going to be wrong. Now, because I'm extra, sometimes I'll even say beforehand, I'll say, I am wrong about this unless, and then I will list out conditions ahead of time, and I have to have listed them. So this took a lot of like thought and a lot of being able to, a lot of monitoring all of my trades. Unless RSI is at support, then this next support, if it's still above this next support, I will hold it. So just understanding ahead of time what your conditions are will save you. And you can only win 40% of the time and still make money as long as you have a solid plan about when you will fail. And you also have to ahead of time, I think, know when you will sell. So the way that I do things, and it's not the right way, it's just the way that I do things, is if something looks bullish in a higher time frame, if it looks bullish in a bigger time frame, but if it looks bearish and I'm trying to catch the top in a smaller time frame, let me use the reverse example because I'm a bottom catcher, so I'm like, that's why I'm having trouble. Okay, so if something looks bearish in a larger time frame, and if it's starting to look bullish in shorter time frames, that's what will happen, right? The shorter time frames will change first, like the weekly will continue looking bearish, but then first the 15-minute might not look bearish anymore, and then the 4-hour might not look bearish anymore, and then all of a sudden the daily might not look as bearish anymore. But anyway, if I'm catching something, then I'm not going to put in the entire trade on the bottom. Why? Because remember we talked about fuck up insurance, looking at the higher time frame. Like if something looks bearish but I'm trading against the trend of the larger time frame, I'm not going to put all my money in there. Like a lot of people are trying to catch oil right now. I get it. I'm a bottom cat. I understand. And people are like, well, what if my time frame is fine? But right now, on any time frame, it does not look bullish. Now, I think I think it will be, but I don't know when. And there's no harm in waiting until several of those lower time frames start to look bullish before you decide to go in. There's no harm in that. But there's also no harm in scaling in. Okay, so things are starting to look bullish on a lower time frame. Let me put a third of my trade in and have a plan that now if it gets above a certain value and then back tests it, then I will add my next 2/3. That's what I do. 1/3 in, wait till it gets above a certain level, and if it doesn't get above that certain level, get out. At least take partial profit and then let it go to zero just in case. But if it goes above that resistance, then wait for it to back test, add the next 2, and then that's good. And but if I'm trading on something that looks bullish on a larger time frame and looks bullish on shorter time frames and is just pulling back, or what I think is pulling back, then I'm going to probably put the whole trade on. So it very much depends on for me what things look like in the different time frames, whether I'm scaling in, how I scale in. Now how I scale out is very consistent. So what I do is I take 1/3 off at, and it depends on, like, so if I am trading something that's against the trend, I'm going to take 1/3 off at just a smaller percent level. And that there's a little art to that, so I wish I could just tell you, but I could take 1/3 off at like 3 to 5%. So then I'm going to let the other 2/3 probably run, and even of my first scale. So it's either going to go back to zero or break even, or it's going to get above, and like I said, and then I will add back that little 1/3 and maybe another scale or two, and then let it go from there. But the key is to have had it planned out before you actually put the trade on. So I can't tell you how that is. I can only tell you what I do. And like I said, I can't do it in one little video. I'm just trying to give you examples and try to unconfuse you. I'm hoping this is helping. I think that's about it. So I want to talk about charts now because I'm just hoping that was helpful. Okay, let's do that. Let's talk about charts. All right. So, oops. Okay, so I moved my face down to the lower corner. I hope that helps too. Anyway, so this is my weekly ES chart, which is also SPX futures. And I think last week a lot of people were calling, I said it, a lot of people were calling the top here, and I'm like, oh, I can't really see the numbers. Hold on. Okay, so a lot of people were calling the top last week, and I was like, well, it did bounce off my financial crisis line, but it didn't look toppy to me. It just didn't, because it just didn't. So this candle is kind of hammerish, which I'm not the biggest fan of in an uptrend. So I'm actually looking for some sort of pullback to happen soon. I don't know, I could tell you when I think, but I don't know if I want to. But I am looking for a pullback to happen soon. That doesn't mean that this is a dead cat bounce. I don't know that yet. I'll show you on my daily chart when I think when I would be willing to say that I'm wrong about it going up. So I'll show you that there. But I'm looking at these pivots on the weekly time frame, and so also if I have a bigger time frame and then I'm trading off of a smaller time frame, I don't necessarily watch the weekly chart all the time, but I will take these pivots and put them in as horizontal lines on my lower time frames. That's probably a lot of what you see all the time when you're like, why are there all that many lines? And I don't care to explain them because they're mine, but I try to explain them in the text of a tweet or something. But anyway, these are the pivots that I'm watching for this week on ES. I would very much like it to go up more before it goes down. So let's talk about the daily. Eric's line, y'all. Eric, somewhere in this yellow shaded area, Eric went all in, and guess what? We finally back tested it this past week. To me that was a duh. That was just obvious. But again, like I'm not Miss Cleo. I don't know. I totally know. But I don't know. I do know. Anyway, what it hasn't done is it hasn't gotten to 2,900 or hasn't gotten to my little lines here yet. That would be my target. Now, it might not. A lot of times, things don't get exactly the highest level they could get before they turn around. So I don't know. Caution. If you're long here, I'd say it's time to start like. Maybe scaling out of some profits here if you went long with me. Yeah, so right now I'm sort of just, what I had said last week was I thought that it would get to somewhere within Eric's all-in area, and which by the way goes up to all the way to 2960. So, and it may go higher. It may go all the way to this pink line. I don't know, but somewhere around here I'm looking for it to drop, because now I'm seeing a lot of people are very, very confident that it's going to go up and to all-time highs before it goes back down. And before, when I was talking about it, a lot of people were not confident. In fact, this meow line here was where a lot of people were calling the top of the dead cat bounce. That's why I called it meow, and that's why I also thought that as long as price was above it, we're good. So what I'm looking for, what I am personally biased for this week, would be for price to get somewhere within this yellow shaded area, don't know where, don't care where, and then for it to come down. And it's got to scare people pretty significantly. It can't just look like, I mean, I don't know. It doesn't have to do anything, right? But my guess would be that it would want to scare people out of it. So maybe, who knows if it'll go to 27.23 or look, because that's sort of the next support I see. You can see it here horizontally. And another thing is, I draw all sorts of channel lines, but the horizontal lines are much stronger than any kind of slanted line. If you look at any chart and you draw horizontal lines of places where prices bounced or bounced from, you will see that horizontal lines are the shizzle, in my opinion anyway. They are. So I'm looking for it to kind of sort of take a step back here and then come back up and then take a step back here and come back up. So in other words, I'm looking for consolidation. And I don't know where that'll be, but some consolidation before it decides whether or not to go up or go down. Now I am biased currently for it to go up, but consolidation is great because it gives you a lot of intraday opportunities, and it gives you a lot of room to be right and wrong. So I'm just looking for price to sort of do something here that would allow it to rest a little bit. Whenever people say it can't go straight up or it can't go straight down, no, it can always do anything. But this consolidation here right after the bounce down from the meow line allowed it to get the refuel to go back up. So I'm looking for, because this is, if you look, there's this space here. Now this is not a gap, but there's this space here, just like there's this space here. There's wicks, but there's no candle bodies. I always feel just more confident. See, it did it here. See, there's that little space here, but then it went back and kind of edged it a little bit. So I'm just, same thing here. So whenever I see sort of wicks but no candle bodies, I'm like, was there enough volume there? Has that price level been tested out enough? So, let's see if it'll sort of test out up here, and then let's see if it'll test out down here, and we'll go from there. But I just think there's some consolidation that needs to happen before it decides whether or not it's going to go or. Okay. All right, let's talk about oil, because I have a lot of people asking me about oil. So this is the weekly chart. Nothing about this candle looks bullish to me. It just doesn't. I'm not saying it's not. I think it's actually ripe for a pop here, but I will say there looks to be some divergence forming. Now, the reason I say looks to be is because right here I could draw my little light blue line that I always draw for divergence, and I could draw my little light blue line here. But if price drops like a mofo next week, then, or this week, then it could actually go all the way lower, and then that divergence has disappeared. So you sort of have to be careful, especially if you're using divergence as one of your tools, that you give it space to be wrong, especially when you see it first forming. I personally like to see not 2 points of divergence, but 3, before I will sort of incorporate that into my analysis. I like 3. I just do. But sometimes, if something is putting in a divergent bottom, it will just have 2 points of divergence. So let's see. I mean, I guess that means these are the pivots for this week. So I guess that means above 1841, and it has a higher likelihood of being bullish. But below that, then I'm looking at my next pivot of 1574 before it goes down to my pink lines here. I don't know. But if it happens to go to 1574 and then at the same time get onto this RSI support, I don't know how that would. I don't know. But if that happened, then I'm gonna start to look at smaller time frames and figure out whether or not I can find something bullish, or a pivot that lines up with RSI support. Me personally, I don't always I don't always wait because I scale in, but I try to have both RSI support and price support before I go long anything, especially if it's in the opposite direction of the way I think it's going to go. Okay. This is the 4-hour crude chart. It's so yuck. I can't even talk about this. It's just yuck. And I don't see divergence here yet. So, I'm, if something is not doing the things that you want it to do, it's okay. There's other things you can trade. Me personally, I have at least 5 things that I kind of know, I kind of know how the price moves like the back of my hand. And then I'm also looking at, other opportunities, like when I shorted Starbucks or when I tried to short Apple and it wasn't the time. So I try to sort of keep my options open because there's always opportunities. You don't necessarily just have to trade oil. I know it's fun. And, yeah, so yeah, there's that. Okay, now let's look at gold. If you remember, I was a little like, I don't know, I didn't know whether it could get above these. And I said, if it get above these, it's going to the moon. and it freaking, it did, and then it didn't, and then it acted as if it would. But this looks to me like a false breakout because it's got the you remember I said, it had some divergence, but it may have already, I was talking about this divergence at the time. Let me go ahead and draw that in there because that's what I was talking about then. So I was talking about, oops, live charting, y'all. I was talking about this divergence here, and I was like, it may have already played out when I went down here, but so right now it's sort of in the middle of space here. It's not bearish yet, by any means. I would expect it to, if it does hit the 1685 level, I would expect it to sort of wobble around. So you can see this has been a very consistent level here of price interaction. So if it goes straight through it and it doesn't wobble around, I would think that would be very bearish. If it wobbles around here, then we don't know yet. That's one of those things where you'd have to set a condition. So if it wobbled around but then got above here, that might be good scalp material. But who knows if this is another head and shoulders. You see the pointy shoulder? I guess you could call this a head and shoulders too. It's a wonky ass, but yeah, it is. So it might be another shoulder forming here. And then I would say, you don't have to take every trade, but that would be an easy trade, right? If it bounced off of here and got to shouldery, and then it came back here, and then it got below. Sometimes, you can see the big head and shoulders here. It's at least good for a scalp and a back test forward. So we'll see if we get another one, and I don't know. So I just don't know. I'll have to watch it. And if it looks easy to trade, then I will put something on it on Twitter. But right now, it does not look easy to trade, in my opinion. Not if you're not in a trade currently. It does not look easy to trade. Okay, let's talk about silver. I was a little more about silver because of these gaps. That was really why I was hesitant about gold, because I don't like that. But if you are long silver, this has been a great trade for people who've longed it. If you are long silver, what I wouldn't necessarily do is add to a losing position if you're in a losing position, because you don't know whether or not it's going to come all the way down here or not. We don't know. Hope not, because I have some in my longer term account. But I would wait until it closed above this wheelchair line. So tomorrow and this is a pretty flat line, but tomorrow it's just above 16, because then you've got a breakout and you're moving forward. I mean, I don't know. I mean, maybe it's going to spend the week consolidating in this triangle. I don't know, but these are the pivots I'm watching. And I'm looking for closes above and below to figure out what to do. But I certainly would like, I noticed that gold didn't go down as much as silver did on Friday. So it could still be bullish. It's hard to know whether this is, it's hard to know whether this little, I don't even know what, cluster F of candles is, it's hard to know whether it's a top or not. It's possible. I mean, it kind of looks clustery like this, but reversed, doesn't it? This looks like the upside down version of this to me. Hard to know. I hope I'm being helpful. Let's talk about Natty. What? So, I posted a chart, and I had superimposed Lucifer to be upside down in this, because to me these look like devil horns. I was like, oh, like it's like a bat. It looks like a bat to me hanging upside down. That probably was what I should have done and not like the devil, but anyway, if you're not already in this trade, I wouldn't get freaked out by it that you're missing something or missing a short even. I mean, the trend is down. If you go to a weekly chart, the trend is down. Now I have some, I'm not going to show you my weekly chart because I've never done that and that'd be weird, but I have faith in my monthly and I like my weekly. So I'm going to say that if price can get above this 1.80 level, might get a nice scalp even just to this previous gap line. And then if it gets above this 1.9, I'm going to tell you there's probably then a very nice scalp up to the mini key line, which I talk about. I'm going to make the mini key a little bigger now because it's important. Okay, still mini, but a little bit bigger. And so if it gets above 1.9, I'll look for it to go to 1.985. And then if it closes, not if it gets above, because look what it's done. So far, it's sort of, what it's done is it's worn out this resistance, which I'm totally into. So for me, it's worn it out a couple times. So next time it closes above 1.985, I'm going to say, what? That might be a trend change. It is currently bearish. Currently bearish. Look. In a down channel. Currently bearish. Wait for it to break out of that. Wait for it to break out of that. Wait for it to break out of that. And then I'm going to start talking about like Natty in your face all the time, because that could be a really big deal. That could be a really big deal if that happens. And if it doesn't, then we'll see. So price, pretty much closed on resistance here, but slightly above, very slightly. Let's look. RSI resistance. Very slightly. So I want it to stay up, and it could still come back down and test because it's Natty. It's Natty. It's going to do really annoying things. So it could, who knows what it's going to do. But I see these things. See, this is the MAs are starting to curl up a little bit. These two, just a little. They could certainly go flat again, but starting. And then somebody showed me a UGAS chart, and I looked at a daily UGAS chart, and I looked at the volume. I was like, well, hello, volume. I think it was either this day or this day. I was like, whenever I see spikes of volume, it doesn't mean that that day is necessarily the bottom or the top, but it makes me think, like, it gives me food for thought that potentially, if you see high volume after something that has just been horrific, then it might be a sign. But typically they do the high volume and then they flush and then they go forward. So I don't know if they're going to do that or not. But it's something to watch. And nobody watching Natty, because people think that Natty can only go up in the fall or winter. So this would be a great time for it not to. For it to do the exact opposite of what you think. I don't know. But that's how I'm feeling about it. Okay. So I hope this was helpful. I'm sorry, I might have blabbed. If I wasn't now, I mean, I don't have the video editing software yet, but maybe someday I'll be able to cut out like or go when I'm talking too much. But speed it up. Like I sound like a chipmunk. Anyway, I hope you're having a wonderful weekend, and I hope this helped. And I will see you around the internet. Oh, please subscribe. Okay, thanks. Bye.